What are these rising interest rates going to do to home prices? Will they be affected at all? Let's find out. Welcome to another real estate market update. I'm Erik Braceland with Braceland Homes here in sunny San Diego, California, where we guarantee the sale and or purchase of your home. Here on the Braceland Homes channel, we cover topics related to buying and selling residential real estate and trends happening across the housing market. Let's talk about mortgage interest rates, probably one of the biggest topics that's going to be talked about as we go into the new year. Real quick before we start, whenever I'm talking about a rate, and I may say interest rate, mortgage rate, I'm simply referring to the rate of interest on a home loan in a general sense. So what's going on with these mortgage rates? The overall outlook is that mortgage interest rates are going to rise. I'll talk about that, but this is a look right now at a 30-year fixed loan. If we look at January of 2020, prior to the pandemic, we're knocking on the door of 4%. Right now, the average 30-year fixed is 3.1%. Many calling for that to rise as we go into the next year. I'll show you what forecasters are saying, but if you were to ask me what's going to happen with interest rates, I think we're just going to go back to where we were. This is a historical perspective on mortgage rates, looking at 2016, 17, 18, four really, I'm going to call them normal years in real estate. And we balanced somewhere between 3.5% and 5%. I think we're heading back there. I think we're heading back into an environment of much more normal interest rates. We've seen some phenomenal mortgage rates over the last year or so, historically low mortgage rates on 30-year fixed mortgage loans, and I think we're going to head back into a time where we were prior to the pandemic. Now, you know, in the real estate business, many people often ask, what's the impact of rising mortgage rates on home prices and home sales? And if mortgage rates rise, how will the housing market be impacted? Well, I went back and took a look at the impact on an environment of rising interest rates on home prices and home sales. So let's see. First one, home prices are slightly impacted by rising mortgage rates. This is a look going all the way back to 2000. And what you see in the line graph there, the yellow and red, is the interest rate. And what you see in the bar graph, the blue and orange, is appreciation or depreciation during the housing crisis. The quick thing I want to point out here is in each rising interest rate environment, represented by the red sections on the line, there's no depreciation, except during that housing crisis. When you start to look at that rising interest rate environment, the first one in 2005, with less appreciation in 2006, but there's still home appreciation on over the previous year, meaning higher home prices. You look at 2012, 2013, 2014, again, an environment of rising interest rates with varying levels of home price appreciation, but all with pretty substantial gains in home price appreciation and rising home prices. The next one in 2016, 17, and 18, we go up and come back down a little bit, but still all with decent home appreciation. Price appreciation is resistant to rising mortgage rates, meaning home price appreciation doesn't soften because mortgage rates are rising. A phenomenon we refer to as downside sticky. So somebody is going to say, okay, if I can't get as much for my home, or if my home is not appreciating as fast, we'll just take it off the market. That's what's happening there. The other question is home sales. Are they impacted by rising mortgage rates? If we go all the way back to 1999, which is what you see in this graphic, we again have mortgage rates in the line graph and home sales in the bar graph. We can see home sales are not impacted by rising mortgage rates. Now, I won't walk you through each scenario, but you can see here each one of the red bars being rising interest rate environments, and they're not corresponding with lower home sales. So if you home sellers wanted to argue that it's becoming a bad time to sell your home because the interest rates are rising, I'd simply ask, on what information are you basing that opinion? Because when you go back and look at it historically, it just doesn't prove out. I want to wrap up with this quote. Context matters right now for the housing market, and certainly for purchase demand. The economy is improving, and millennials continue to age into their prime home buying years in large numbers. So context remains good for the housing market. Real quick for you home buyers, my oldest son is included in this millennial group, and he is super excited to be closing on his first home here in the San Diego housing market. I did help him find the home, and I did represent him, during the negotiations, but it wasn't all good times. We did have to compete against multiple offers. We didn't get a deal on the price because of that. And we got very little seller concessions. And my son has some work to do on the home to get it up to the standard he'd like it to be. So I know it's tough out there for you home buyers. And that's the reality of the housing market still in many areas of the country, just like here in the San Diego housing market. But you know what? It was still a win for my son. We got the home that he wanted, and he can make it the way he wants as time and budget allow. That's the goal. So persevere and don't give up. Get your foot in the door to home ownership. The context of the housing market remains good for you too. Was it better yesterday? Probably, and I'm sorry you missed out on that, but stop waiting. I think overall, as we look at mortgage interest rates, we can expect an environment of rising interest rates going into next year. I don't see that affecting the housing market dramatically, but it will cost more for those of you looking to buy a home. I think you should expect that as we go throughout the next several months and the next year. But leave me a comment below and tell me what you think. Perhaps I'm missing something. Please let me know. How do you predict mortgage rates will impact the housing market? Will home price appreciation take a hit? What will be the effect of rising mortgage rates on home prices? A lot to consider. Leave me a comment below and tell me what you think about those. Anyway, that's all I have for now. I'm Erik Braceland for this edition of our Real Estate Market Update. From everyone here at Braceland Homes, thanks for tuning in, and thank you for the time that you spend to be aware of what's happening in our current housing market. Make sure you tune into our channel every Thursday morning at 11:45 a.m. Pacific Standard Time to get up to date on all the current housing market changes. You will enjoy a better, more successful real estate experience because of it. If you've enjoyed this content or found it helpful, please hit that like button, consider subscribing to our channel, and share this content with someone you like. Thanks for joining me, and I'll see you right back here next week.